Hello, ladies and gentlemen. Good morning. You're with the European Market Outlook with Joseph Novichkov, Senior Analyst at GDMFX. Starting with the Japanese yen, what we saw this morning that it dropped toward a 7-year low against the US dollar. And of course, the Japanese 2-year yield slid below zero after a government report showed household spendings declined and inflation slowed. Japan's currency has fallen at least 1.4% against all of its 16 major peers this month on speculations the Bank of Japan will keep expanding stimulus as the economy stalls. The prices right now again at 118.20 yen per dollar. Australia's dollar declined with the Norwegian kroner and the Canadian dollar after OPEC members left their output target and changed yesterday, even as oil prices slumped. Australia's dollar slid 0.4% to 85.07 US cents. The kroner weakened 0.1% to 6.9325 per dollar, and the Canadian dollar fell 0.1% to 1.1345 Canadian dollars versus the US currency after slumping 0.7% yesterday. The euro headed for a fifth monthly decline against the dollar before reports that economists say will show inflation in the region slowed to 0.3% in November. That would match the rate in August and September, which was the least since October 2009. Mario Draghi said the European Central Bank is open to buying a wide variety of assets for further stimulus, as German and Spanish inflation data highlighted the struggle to revive the euro area economy. And for the news we've all been waiting for, OPEC took no action to ease a global oil supply glut, resisting calls from Venezuela that the group needs to stem the rout in prices. Futures slumped the most in more than 3 years. The group maintained its collective production ceiling of 30 million barrels a day. Ali Al-Naimi, Saudi Arabia's oil minister, said yesterday after the 12-nation met in Vienna. Crude oil fell with $6 yesterday, breaching the $70 per barrel level to find support at 67.70. And now for the yellow metal, gold fell for a third day also to head for the first weekly decline in a month, as crude oil at the lowest level in 4 years increased prospects for a cooling of consumer prices, reducing demand for inflation hedge. The metal is 1.1% lower this week, extending declines from a third-week high of 1207.93 on November 21 before a Swiss gold vote. Switzerland holds a national referendum on November 30 that would require a central bank to hold a fixed portion of its assets in bullion. Let's take a look at the calendar for today. Major news, 10 GMT, CPI and unemployment rate for the euro area. And at 13:30 GMT, Canadian gross domestic product. That's all from me from today. Thanks a lot for being with us. Bye-bye.